Dang, we right into it. We are back. This table is squeaking a lot, and I need to fix that. How to get sniper entries part 2. I've seen the response and the reaction to my first video of sniper entries, and a lot of people have been asking me to do another one. So I'm just gonna do another one right here to fine tune your entries, because at the end of the day, if you don't get a proper entry in your trade, obviously you won't maximize the reward, and then you're obligated to get faked out a lot of the times. This table is really pissing me off. Squeaking a lot. Anyway, so this video is purely about entries. Before I get there, obviously, if you want to learn directly from me, go to www.theswaggacademy.com. Obviously, YouTube is more surface level information. If you want to learn directly from me, one-on-one, you can text me, FaceTime me, call me whenever you want, do Zoom calls so I can break the market down for you, give you my analysis, www.theswaggacademy.com. Let me get to these charts. All right, so like I said, with entries, it is very important. And like I said, before I get to the video, this is the website. Obviously, everything is here. You have the timeline. You can talk to whoever you want. You can send messages to people, put your analysis, write a status. I'm looking at GU right now, all of that, so on and so forth. You can see all the members right here, see when they're last active. You can send friend requests to people. You have your own profile, obviously, when you join. And then obviously the members' content is right here where you watch all the videos. But yeah, so back to the entries. It is very important for you to have a strategy for trading. My strategy is purely price action and market structure. What I mean by that is I trade in levels. So look at this resistance and look at this support. I literally trade off support and resistance, my supply and demand zones. I don't trade anything else. So for example, like before I even do anything with a chart, when I open up a blank chart, let me go to a random ass pair that I will never trade in my life. Great Britain and let's say New Zealand. Yeah, cool. I won't trade this pair ever. But let me break down what I would do. The first thing I would do is find my key levels. And if you don't know how to find your key levels and support and resistance, go back to my YouTube, through my channel, and I break down exactly how to find support and resistance levels. The accurate ones, the ones that the banks use, not these retail traders, I have those support and resistance levels on. You find those and you trade off of those. So going back to Euro USD, if you look at this for your entries, every single time, I even have this still marked up. Even right here, when price gets to my resistance, that is when I'm looking to trade. I'm not looking to trade when the market's right here, right here. Over here, I'm looking to scale in. Right here, I'm looking to scale in. Here, I'm looking to start a trade. And here, I'm looking to start a trade. Breaks through resistance, which will support over there. I'm looking to start a trade. So back over here, the minute price gets to my resistance, even a little bit under it, but when it gets there, I scale down. And it's really clear how to get these entries. Price, when it gets to resistance, it can only do one or two things. It can break through it, or it can reject it and head back down. It looks like it's rejecting. We get a box right here. This is why you have to be very, keen and studying on your eyes and your charts, because you know when price is rejecting. You know if it's going to break through a level, it won't place 8 dojis in a row and then break through the level. It won't do that. You know what I'm saying? It'll do that if it's rejecting, but not if it's breaking through it. So clearly this is a sign that it's about to reject. We get a moving average crossover and then candlesticks that flood through all the way down, even a Maribozu. That is your entry. That is your sniper entry right there. There's nothing else to it. Like in my first video, I broke down as if I was live trading. This, I'm just going to go back and just go to random pairs and tell you where you should have got in at. You feel what I'm saying? Like I said, I trade in levels. So my take profit is way down here. I usually trade level to level, 1 to 13 right here, risk to reward ratio. And obviously the market is still heading back down. That is where your entry is. You look over here. Oh, not even that. Let me go back. And then my stop loss is up here. The minute the market goes down and comes back here, I'm looking to do two things. I'm looking to move my stop loss in profit. So if I ever, like if the market goes down here and it comes back up, I just lost, but I actually won some money. The worst case scenario, I won a few $100s or $1,000, depending on my lot size. Also, I'm looking to scale in. So this is another entry. So another short position right here. Once like the close of this, obviously shooting star, stop loss up here, take profit down here. Now I got two positions at the same time. Same over here, comes down, comes up. Now the first stop loss and the second stop loss get moved to the third, which will be right here. And then this is now a new entry. Close of this, moving average still crossed over, lower high, no structure. You have to know structure, lower high. Now I have 3 trades all going in the same direction. This one and this one are in profit. So it's a risk-free trade. So that means if the market comes back up and comes up here, I just won this trade, well, this trade and that trade, made a bunch of money. And then this one got stopped out and I lost a little bit of money because obviously this isn't a risk-free trade yet. But this one and this one are risk-free trades. Your entry should be always at a rejection of a key level or a breakthrough in a retest. And if you're scaling in a downtrend, every time price makes a lower high, scale in. If it's an uptrend, every time it makes a higher low, scale in. Even over here, I even have it over here. Price gets to this support. What does it do? It hesitates. Price is not, like, you gotta understand market structure. Price is not going to hesitate over and over and over again just to break through. It won't do that. Unless it's waiting for some fundamental announcement, it won't do that. It's gearing up for the push all the way up. It's like practicing and getting ready for the reversal. So over here, you see it. You have this box drawn around the whole thing. Moving averages are really tight, which means it's consolidating. And then you see right here, price starts to create a higher low. That is the sign number one, or actually number two, because number one is that it's actually consolidating. Number two, moving average crossover right here. Boom. Blue crossed over to red. And then we have a huge momentum candle. That should be your entry right here. Stop loss right below here. Take profit at this next level, 1 to 4 risk to reward ratio. And then the minute price goes up, you got to understand price will always retrace no matter what. So price comes up, comes back down, and then comes back up. Guess what I'm doing? This stop loss is getting moved. It won't show it obviously on TradingView, but it gets moved to right here. So now it is a risk-free trade. So no matter if the market comes back down and stops this, it's stopping me out in profit. A lot of people forget to use that trick. And then the market comes down, it tries to come down again. Guess what it doesn't do? It doesn't take out the last higher low. Boom. Now that it goes up, this gets moved right under here, comes up, comes up, comes up. And guess where it goes? It goes right to our take profit, maybe a few pips below it. Doesn't matter. Manually close. Simple as that. You could even use the Fibonacci to get to that 27 extension from the bottom to the top, which is over here, this top right here, to that top right here. A, the bottom. B, C, retracement 61.8. D, 27 extension. The minute it got to 27 extension, it came back down. Could not break the higher low. You got to know structure. Another Fibonacci from here to there. A, B, C gets a little bit short and shy of D. It's good enough. You feel what I'm saying? Like, you have to understand, have your strategy in place. I trade market structure. I don't have a lot of stuff in my charts. I trade the same thing over and over again. I trade in, support and resistance. And the same thing, like I said, even though you move your stop loss right here, guess what? You scale in. Scaled in right here. You scale in right here. Scale in right here. Simple as that. Price never stops you out because you know structure. You know price action. You know market structure. You know it follows. It follows. It won't take, you know what I'm saying? It won't break structure and then continue to go in the direction that you predicted. It won't do that. And you have to know structure. A lot of people don't know structure and they place their stop loss anywhere and they take profit anywhere as opposed to aligning it with structure. Let's go to a random chart. Next one, GU on the table. Cool, already have it here. Okay, cool. So price breaks through this resistance, which I have at 125, comes right here, stops, looks to, retest this level. So this is my top point right here. I actually broke this down for one of my one-on-one students earlier when we had our one-on-one session, which is why it's already marked up like this. Comes down, comes up, creates a higher low. The minute it creates a higher low, we are looking to sell. Even though price is not fully broken this yet, it is telling us that price is about to go down. So price comes down, breaks through support, comes up, makes a lower high, and then it continues down. Once it makes that lower high and that shooting star and that doji, guess what? Enter. Bearish engulfing. You guys should know what a bearish engulfing is. If you don't, it's obviously in my course, but type bearish engulfing, images, and then look, right here, bearish engulfing, big red over a small green or blue candle. That's exactly what you got right here. That could have been, should have been your entry. This is a 1 hour. I probably would have got a more of a sniper entry than this. Stop loss above here. Take profit is actually, believe it or not, I don't have my levels on here, but I know my levels by heart. Excuse me. My next level would be 122.5 flat. So obviously lower high right here, lower low. Price should come up, make a lower high, make another lower low. If it doesn't make a lower low, then obviously this trade is done. But this is my level, 1 to 4 risk reward ratio. Remember my most important Forex strategy you'll ever hear video? I don't trade any risk to reward that's less than 1 to 3. That's just my strategy. I think that strategy should be implemented by a lot of people. But you should also understand that don't get stuck to any bias. Like if you think the market is going to go down, the 100% has to go down. It does not. The market does not give a damn about you or me. How I trade is I adapt. So if the market is breaking through a resistance, guess what? I'm gonna buy it. If it's rejecting it, I'm looking for sales. I adapt. I don't have a preconceived notion of the market because it can do whatever it wants. I just adapt and react to it. So for example, I start to say this: if my take profit is down here and the market comes down, lower high, lower low. Let me get this brush tool right here. Lower high, lower low, lower high, and then comes right here, doesn't take that lower low out, and it starts to come up slowly. Guess what I'm going to do? I'm going to manually get out. I'm not going to be like, oh, it has to come down here. No, it does not. That's just my take profit. That's just my experience with the market, and I know where I put my take profits, and I'm consistent with it. But no, it does not have to go there. Like, obviously, you got to abide by structure. Price, lower high, lower low, still going down. Lower high, still going down. Higher low, that break structure right there, that tells us a price is not going to make a higher low, come up, higher high, and then come down. It will not do that. It won't break structure. Unless there's some weird ass fundamental announcement, it won't do that. Now it's looking to go up, down, higher low, boom, come back up here. Now we're looking for buys until it comes right here and then like rejects it again. And if it does reject it again, then we're looking to sales down here. But the minute it does this and breaks structure, guess what we're doing? We are getting out of the trade, closing it in profit. We are done. And again, let me backspace. Remember, when price makes another lower high, just like it did right here, this gets moved, obviously in profit, because my entry is right here. Stop loss gets moved to right there. Let me delete this really quick. Right here. If it comes up, make another lower high right here and goes down, guess what? Stop loss gets moved to right here. Same as I said before. Like, you need to focus on your entries, focus on your strategy, like every single time. Like, I'm trying to go to random pairs just so I can give you guys examples of where you should and would have gotten in at. I think I did this. I think this is actually the pair I did my sniper entry video on. I'm trying to go to a random pair so you guys can see exactly. All right, GA. This is a pair I actually traded, and this is the pair I made the 5K on. Right here, exactly. I told you I made that 5K off of this move right here, breakthrough. Your entry obviously was right here. But if I want to make an entry off of this, the break of 2 right here flat, look at this. Plain and simple. Price comes down here, comes up. The minute it comes up here, it's starting to form an evening star. If you know what an evening star is, like I said, this is why you have to be in tune and understand what your market patterns are. Evening star pattern. Price makes this. One big green candle, I don't know if you can see it. One big green candle, small, and then a red candle follows. One big blue candle, blue, green, same thing. Small doji candle, and then boom, red that followed. Now, it should be a little bit bigger, still the same thing. Once I saw this, I am scaling down. Let me just make a mark on this so I can see it on a 15-minute time frame. 30-minute, 15-minute time frame maybe. This like this, up here, cool. I see that evening star on a 4-hour time frame. I'm immediately looking to scale in on a 15 or 5-minute time frame. Price is not breaking this level right here, so obviously my stop loss should be above here. My entry, look at it, structure. Structure is as simple as trend lines, lower high, lower low, uptrend, higher high, higher low. Come down, up, down, up, down, up. Moving average is still close. Moving average crossover right here, off of this doji right here, right here. My entry is right there. This is doji, moving average crossover, boom, comes up. Take profit above there. Stop loss way down here to the next level. 1 to 8 risk to reward ratio. Never stops you out, comes down, comes up. Guess what my stop loss? Stop loss is now in profit, risk-free trade, and look what it does. It goes to the level. This is why you got to be like smart and in tune with what your strategy is. This is my strategy. If I drag it all the way across, you can see price got down to my take profit, close the trade. Once it gets to my my next level, what am I looking to do? I'm not looking to keep, continue selling. I'm looking to see if price wants to reject it or continue in that direction. Obviously, price comes down here, creates a hammer. And obviously, you can see I have like a little alert right here, the orange line. This is GA right here. So you can see I have my alert, GA. If it crosses, if I can click it, if it crosses 195, did not cross 195, because obviously if it would cross 195, that means it's breaking below, and I would have got into sell. Comes down here, comes up, creates a higher low. Simple and plain right there alone should have told you guys, look to get in. Right here, lower or higher low. Come right here, right here, right here, moving average crossover. That is your entry right there. Stop loss right here. Guess where your take profit is? Way up here. We're in the 5.5 risk reward ratio. It's coming back down. What is it doing? Probably a Fibonacci. A, B, let it get to C. It's at 61.8. Let's see what it does. If it gets to 70.6 or it just stops there. It's probably gonna, reverse really soon. Come all the way up to 27 extension, and that plays perfectly and on par with our take profit at 2 flat, which we believe that price is going to go to. Hope you enjoyed that video. If you have any questions, obviously email me, chris@swagacademy.com. If you want one-on-one sessions and lessons, learn how to trade for me directly. Like I said, it's www.swagacademy.com. We can Zoom, I will text you, FaceTime you, give you analysis on your pairs. We have that social timeline where you can talk to any and everybody and you won't feel alone. We're a big community. Like, I don't believe in MLMs. I hate them all. I don't believe in Facebook groups and Telegrams. Like I said, we have it all built in the software, so you don't have to go anywhere else. And like I told somebody earlier who inquired about my one-on-one course, he actually enrolled, but he had a good question. The difference between my YouTube videos and my actual academy, YouTube is just surface level information, and it's just like, it's whatever videos I think about at the time and just post them. I take your suggestions sometimes, but my academy is A to Z. You learn everything from beginning to end, and you have me. You can call me and FaceTime me. With YouTube, if you could just learn off of YouTube, everybody would be a millionaire. If you could just learn off of baby pips, everybody would be a millionaire. They become millionaires and great professional traders by mentors. I did not learn how to trade on my own. Not at all. I learned from Sean Lee and Nat from Astro FX. They taught me everything. I learned from them, and now people are learning from me. Like I said, so these YouTube videos is just to help you and intrigue your mind a little bit and get you going with the market. But eventually you have to take that leap, whether it's learning from me or learning from anybody else. Like I said, I don't mind if you learn from somebody else. I'm just trying to help you get, started in the market and get you interested in it. Because like I said, eventually you're going to have to learn from somebody. And I just have my academy as a resource in case you want to take that extra leap. But until then, keep learning from YouTube. It's just hard to learn from YouTube, watch YouTube, and then implement that on an actual chart. You know what I mean? As opposed to texting and calling somebody. So hope you guys enjoyed that video. If you have any questions, like I said, email me or write me on the swagacademy.com. I do take consultations if you need a phone call and have more questions. Like I said, just email me. I'll give you my number. You can call me anytime you want. We can talk more. So I'll holler at you guys. I appreciate you guys. And as always, gang.